Hello, folks, and welcome back to another edition of the CryptX LiveWire. Today is January 8th, and this is the 5th day of January in terms of the trading days, obviously not the actual days. And so a lot of people like to talk about things like the January effect or the first 5 days of January. Since the 1950s, there's about a 75 to 80% chance that if the first 5 days of January end positive, then the year has that likelihood of also ending positive. We'll see how that, kind of stacks up. I think that data is a little, just kind of basing on the fact that the stock market has upward drift over time. But I mean, we'll see, right? We'll see. Monty, good morning. How you doing, sir?
Doing well, CJ, doing well. And yeah, excited to hear about your take on the January effect. Certainly kind of sets the stage for 2026 and what we can expect to see throughout the year. But today I want to just talk about Bitcoin and also some altcoins. But particularly, I want to talk about why, despite the fact that we're seeing negative price action today, I'm actually encouraged by what we're seeing from Bitcoin. And then I want to look at some altcoins that are outperforming to the downside. We can take a look at XRP. That is one that we talked about a little bit yesterday during our member webinar, but I can definitely hit on that one. And I want to talk about some funding rates and just go over some general positioning data to see if people are long or short, given the recent price action in the crypto market. So we are pulling back a little bit today, but I still think there's a reason to be encouraged. CJ, if there's anything you'd like to start with, please feel free to do so. If not, I can dive right into the Bitcoin chart.
Yeah, let's dive into the Bitcoin chart.
All right, let's do it. So, like I said, we're down on the day, but that is not the whole story, right? So what we're seeing here is some pretty good supply absorption below 91K. So as price dips below 91K, we're getting this wick back up, and it wants to hold support at this 20-day smooth moving average. And that's what I want to see, is this level held as support. And ultimately, if we look over the last few days here, we've seen some pretty nice volume. I want to see an uptick in volume as price retests a significant level. And, we talk about it all the time, the importance of knowing what a role reversal is. And this 20-period smooth moving average all the way down has been acting as resistance, acting as resistance, acting as resistance. And it also marked a breakout level for price action. So now we have price dipping back down. And as we wicked below this morning, supply was bought up pretty immediately and brought back up right back to the 20-period smooth moving average. So this to me is just an interim pullback in the midst of a greater uptrend, and isn't that unhealthy or that unlikely of a scenario. This is what you see during uptrends. You see profit taking after a strong move to the upside. We also saw, and we talked about this yesterday during our member webinar, but during on Monday, kind of late in the evening, we saw funding rates began to spike, and that was a good indication that this trade was getting a little bit crowded, and that in the interim there might be a brief pullback, and that's exactly what we saw. Now, one last thing I want to touch on is some of the various funding rates of the assets and the volume in the last 24 hours. So overall, for the most part, volume is down or on a 24-hour basis, but that the day is still young and there is still time. I think if price lingers around 90,000, we'll continue to see strong supply absorption, but also significant sell pressure due to some people just, taking profit and getting out because the equity markets are down today and the market's a bit risk off. So I think that, as long as we get close to yesterday's volume, that's a good thing. And the funding rate isn't really screaming anything at this level. It's basically muted. And that tells you that price is reaching kind of a market equilibrium where buyers and sellers are both like equally proportioned throughout the market. So you have an even number of buyers and sellers, and you're not seeing a particular bias in any direction. So you're not seeing traders get particularly long with perpetual futures or getting particularly short. It's pretty neutral at this current level, which is what you'd expect when you're retesting a critical level like 90,500 for Bitcoin, which is exactly what we're seeing. But there are some assets that are worth talking about today. One that I did want to talk about was Zcash. Now that volume is up 184% today. Price is down almost 13%. And let's take a look at that chart, because I think it's very interesting how it's doing essentially the opposite of what Bitcoin's doing, where Bitcoin was showing signs of positive price action. And during those periods of positive price action, we didn't get anything from Zcash. We didn't get any strong moves to the upside in this period of time where we saw positive price action out of Bitcoin. That was your first warning sign. But now price is broken below the 20-day smooth moving average, which, obviously this period here was a period in which a lot of people got short. The funding rate got overwhelmingly negative, and price essentially kind of grinded back up and squeezed those traders out. Now we're seeing a similar thing happening where price is breaking down below the smooth moving average, and we're starting to see traders crowd in short. Now, if we look at Zcash, what's interesting, I still think this is a good short play because the funding rate is relatively neutral, just like Bitcoin. So it's telling me that there's not a lot of people piled into this trade yet. And one way I might trade this, if I were to trade this, and I think I'm going to go ahead and do this, is getting a short Zcash Bitcoin position. Because this essentially, although the chart looks basically the same, I think that this could prove to be the better trade because, we're seeing today resilience from Bitcoin, and Bitcoin, being down about, 0.65%, while Zcash is down almost 15%. So good resilience from Bitcoin in that regard. And essentially, anytime you see a down move in Bitcoin, you can expect Zcash to fall hard. And the same can't be said for moves to the upside, which is evident from last week's price action. We saw Bitcoin break above that 20-period smooth moving average, and we got really nothing out of Zcash. So I think that if you believe that Bitcoin has the potential to go lower, then you might want to consider entering this trade, the Zcash Bitcoin short trade, and ultimately riding this one down because it's showing outperformance to the downside, and it's showing a lack of performance when Bitcoin is trending to the upside. So that in conjunction with a relatively neutral funding rate kind of puts together all the ingredients necessary for a good short trade. And I think Zcash is set to underperform Bitcoin in the short to medium term here. So that's one trade that I really like. We can also talk about XRP, but before we do, I want to toss it back to you, CJ.
Thanks, Monty. Great stuff there on Zcash. Jason, good to see you as well. Had some good times back in the day. So always good to see you guys after a while. But yeah, let's go into Solana and XRP. And I'll bring those up. Just give me minutes. All right. So yeah, I think on a day like today, it's a good idea to look at the assets which are most resilient in terms of the sell-off in Bitcoin. So Ethereum continues to underperform, I guess, kind of the most of the majors, down over 2%, whereas Bitcoin's only down 1%. Also, the positioning in Ethereum is interesting because we've seen large specs buy more Ethereum than they have Bitcoin in the last 4 to 5 weeks, which is interesting now to see it actually underperform Bitcoin and some of the other major alts. But just a little thing of positioning there. Solana, as of now, it's still holding this support level. We'll see if we'll make a run at the new highs, but nothing here for me in terms of a short-term entry. But I have to say XRP sold off a lot. And, I've had this blue box channel here area drawn for quite a while. And that's usually been a pretty good place where price likes to bounce, at least in the short term. So I would look for just kind of a reaction. Doesn't mean we have to make new highs in XRP necessarily, but it does look like, if I was short this asset from the highs, I would be expecting this to bounce a little bit against me, but we'll see, right? We'll see where the trend ultimately kind of plays out. On the weekly chart, I think these look a little bit better. But that's quite the wick.
Yeah,
it's tough. Everything's kind of in a range right now. Monty and I were talking about this before the show. We've been talking about Bitcoin rallying to the 200-day along with, various other altcoins, but we just haven't got it yet. And the longer price takes and doesn't rally, the more the 200-day moving average is going to come down. But we are bouncing from the 20-day here. So, I would look for the assets which are outperforming, and to this point, Solana is. But Monty, any comments on those alts before I move to some FX pairs?
One thing I would say is just watch the volume on those assets. I think that looking at assets like Solana and XRP. I think it's going to be important, particularly XRP, as it enters that range that CJ mentioned, where we typically see supply absorption and a bounce. I think it's going to be important to see diminishing bearish volume, but also possibly an uptick in volume as we enter that range. So today, I'd like to see a close with more volume than yesterday as we enter that range. And I want to see the same thing for Bitcoin. I want to see volume surpassing yesterday's levels as the price action gets bought up as we enter into these critical levels of support. So just keep an eye on the volume on those assets. But I think that in terms of like the long trade, I think that if Bitcoin goes to the upside and bounces from a 20-period smoothing average, you can expect to see some nice positive price action out of these assets as the funding rate is relatively neutral. And I think that their performance earlier in the week when Bitcoin was trending higher is indicative of what you can expect to see as Bitcoin continues its grind higher. So I like both of those assets to the upside, but I think patience is going to be key to kind of timing when we get that reversal for those trades.
Yeah, I'm still kind of neutral in this stuff. It's tough to hold it from an investment spot perspective, given where we are in the Bitcoin cycle. But I would definitely be looking to buy, short-term bounces from support, if we get those setups. But nothing super clear, like screaming at me right now. I do want to talk about positioning data because that's important. If you guys have not heard us talk about positioning data before, we use a couple different indicators. This is just raw COT data, or otherwise known as COT Bushi on TradingView. This is the Bensler COT oscillator. You guys can find that one free on TradingView as well. But this data indexes the players in the futures markets down to 3 categories. So in the CME futures markets, we have large speculators, which are in blue. These are entities and institutions with over 100 million. We have retail speculators in yellow, and we have the commercials who are writing these contracts. And, a good question to ask, it makes sense why a gold miner or like a soybean farmer would be a commercial in those markets because they're actually producing something. But what would a commercial be in a market like Japanese yen or the S&P 500? Typically, it's market makers or individuals who will buy and sell no matter what, as long as the spread is in their favor. The point is they're not speculating on necessarily the long term or a consistent direction in price. But regardless, let's get to the positioning data. So we look for crowded trades, and we look to kind of take the opposite of those crowded trades. This is a technique kind of learned from Jason Shapiro, was kind of the first to make this data like really publicly available and kind of use it as a technique. But what I want to allude to is that we're starting to get a lot of crowded shorts in the yen. And as we can see by our net positioning, the large speculators have been selling this ever since May very consistently. So they are now in a max short position as we kind of triple tap the lows here. The Bank of Japan is also raising rates. So in theory, that should be bullish their currency. And the reason I bring this up, and trust me, I'll bring it all of this is coming together, but I've been looking at ways to potentially hedge the equity market and any risk on trades, because in ES or, S&P 500 futures, we are starting to see crowded speculator longs and crowded retail longs for the first time in quite a while. I mean, look how short retail was at the lows. That was a great indication that risk reward was favorable to the upside back in those days. Now we're actually seeing the inverse, where the risk to reward is optimal to the downside. I've talked about this with Monty and reiterated it a ton. I hate shorting the stock market because the stock market has upward drift over time, but there are crowded trades which are leaning more towards the bearish side of things right now. One of them is namely the yen. When the yen goes up, at least in the last few years, like in 2024, that corresponded with risk off events in the market. And right now we see a lot of crowded shorts and commercials very long the yen. So instead of just longing the yen necessarily, I think there's a little bit of a nuanced way we can do this. And that's by looking at some of the other positioning in the currency markets, namely the euro. So the euro is 50% of the DXY, just in case you didn't know that. So you can kind of think of the euro as largely inverse to the dollar. But we have the reverse positioning in the euro than what we had in the yen, right? We have large speculators max long, and on a net basis, it's actually quite extraordinary. When we look at net positioning in this market since early 2000, we can see that speculators and particularly commercials in red are the most net short they've been. I mean, they've reached this level like maybe 4 times since the early 2000s. So we're pretty stacked in terms of the euro long positioning. So both of these ideas are interesting, but I wouldn't necessarily play them individually. I think one of the ways that you can play them that's very fascinating is through the currency cross pair of euro yen, because if the risk to reward is more favorable to the upside in yen and more to the downside in euro, then a short euro yen would be the most pure form of that positioning idea. And what we can see in terms of the weekly chart is when we look at some of our technicals on euro yen, we start to see that there's a wide divergence in this trend from the 20-day moving average or the 20-week moving average. Excuse me. We had the CCI then turning down as well, creating that sell signal as well as the stochastic. When we look at volume, we haven't had much increase in bullish volume since roughly October as the trend has continued higher. But this might be kind of a short that is more favorable, in my opinion, to hedging any risk on positions as opposed to just shorting stocks outright because they have upward drift over time. So just kind of a thought there. I haven't really gotten a trigger to entry on the daily yet, but this is one that I think could be an interesting hedge to that crowded positioning within the S&P. The other thing that's interesting,
I really like that pairs trade that you put on there. I like that you kind of combine the two trades and you looked at the euro, which from a positioning perspective is very crowded to the upside, and the yen, which is the exact opposite. So putting those two together for a pairs trade seems like a natural fit. And, even if price trends sideways or we get some negative price action in the S&P, I could see this being a very favorable trade in the long term. And this weekly chart setup, I think, also is looking very favorable to the downside. So well done.
Yeah, we just had a close below the 20-day moving average, which is kind of a interesting technical setup. And this is, traditionally a bearish risk off trade.
Right.
Would be short euro yen. But I actually I haven't made this trade yet, but I funded my Oanda account, which is a FX broker. I haven't traded there since, I don't know, maybe 2022, 2023, but they have a lot of interesting cross pairs that, I was definitely looking at this one. And then one of the other ones that I don't know if you guys have really realized this, but look at these mega trends in something like the Swiss franc relative to the yen over the last basically 8 years, ever since 2019, 2018, this one has been just a really large mega trend. So there's always interesting, elements there. I also think it's interesting that the DXY, is starting to come back. It's very close to closing above its 200-day today. And what I have here in terms of the dollar highlighted is just historic cycle lows of what we've seen in the previous 3 midterm election years following their 4-year cycle lows. So we saw a 4-year cycle low, at least to this point, in September of 25. And, we'll see if we follow these trajectories. But the weekly chart on the DXY is, for the first time in a little while, it's starting to set up pretty nicely. So just a couple setups there in the FX market, but I'll pass it back to you, Monty.
Thank you, CJ. Good stuff. Always good to get an idea of the risk appetite of the FX market, because a lot of times you see that translate to the crypto markets as well. So thank you for breaking that down for us. One thing that I did want to just briefly mention, since you were talking about currency pairs and the DXY, was the 10-year treasury yield. And this, tell me if I'm wrong, but it's looking like a bit of a bull flag here. We have this positive move to the upside, this period of consolidation, clear breakout level at 420, and it looks like the tape wants to head up and test that level. If we break above that level, I think we could start trending higher. And this is just, the same thing we've been talking about, role reversals, right? This acted as resistance here, resistance here, resistance here. Um, and then finally we broke above this level and it acted as support. We did break down below it, but we got back above it. And consistently it's been acting as support. We saw it again yesterday, acting as support. To me, this is looking set for a breakout, and anything a close above 420, I think would be indicative that we are going to see the 10-year Treasury note spike in price. So that would, likely coincide with a pullback in traditional equity markets. But ultimately, I think that's something to keep an eye on as we head into the new year, because for the first time in quite some time, the trend has reversed. The 20-day smooth moving average has turned up and has flipped from resistance to support. So some interesting price action there as well.
It's also interesting that price action is kind of counter to consensus in what we've seen. I've been thinking about the most consensus ideas that are in the market right now, and one of them is namely lower rates,
right?
Which is counter to kind of what you just explained there.
Yeah, and we'll see. I mean, obviously, if we do see lower rates in 2026, then you can expect to see that reflected in the 10-year pulling back a bit. But perhaps there are some people that are expecting rate hikes in 2026. I know Polymarket has it at about a 10% chance that we see rate hikes in 2026. That's what the open market's telling us. So I wouldn't necessarily count on it, but there is still a possibility that we do see that.
Yeah, I know the stream's running a little bit long, but I think it would be remiss not to touch on the metals since they've had such an interesting day to the downside. And then also, going along kind of the theme of consensus ideas, I think one of the largest consensus idea, at least to this point with my friends, and so a couple of them keeps bragging about silver and the fact they bought it in 2024, and they just keep saying the same thing, which is the dollar is going to zero. There's never going to be, the dollar debasement trade. We know it. We know the idea. But the dollar's backed by an extraordinary military, which we kind of just flexed that in the recent weeks, or at least the United States government did. And it just brings me back to the dollar being one of the most contrarian trades that's actually kind of starting to work to start the year. And we have such strong amounts of longs in the euro being, 50% of the DXY basket. That could influence the DXY a lot. So I think it's very important to continually, monitor that macro weekly chart situation between the US dollar as well as things like silver and gold, because it looks like the dollar is maybe trying to put in a bottom here. Just my thoughts, but we'll see. Do you have any thoughts on kind of how metals have reacted today and what we've seen and how that relates?
Yeah, I mean, we talked about this during our member webinar a little bit, but I think the positioning data for silver in particular, I think it's still looking favorable to the upside. So I was a little surprised to see this pullback today. But like you said, like it does feel like a crowded trade, but the data is telling us that it's not necessarily a crowded trade yet, right? We haven't seen the commercials start to distribute, which would be indicative of the end of, a move to the upside. Commercials are still max long silver at current levels. So for me, I think this is just the pullback amidst a greater uptrend. I think retail might have gotten a little bit long, and I think we'll see that reflected in tomorrow's COT data. I think we'll see an uptick in retail participation in silver and gold. And I think that that's contributing to today's pullback. But ultimately, like I said, I think this is just a brief hiccup in a larger bull trend because we haven't seen distribution from the commercials yet.
Yeah, that's very true. And like any one indicator, positioning is not 100% of the equation. I think, taking profits and securing wealth for your future is always an important thing if you're long from much lower levels. But yeah, I think another interesting metric in terms of silver was that I forget the exact ticker symbol, but it was the 2x levered inverse silver ETF it saw the most insane volume spike in one day that it's ever had. So what that is indicative of is retail traders are typically the ones who trade those 2x silver ETFs, whether they're, you know, straightforward or inverse. But the fact that they're all buying the inverse one means that there's probably a lot more retail piling into that short idea because of how overextended it is. So it'll be interesting to see how that, you know, plays out over time.
Yeah, I'm looking forward to tomorrow's positioning data and seeing how retail has kind of responded to this move and how large specs are reacting. I think that will tell a lot of the tale of the price action that we're going to see in the coming weeks. So I think, yeah, I think it'll be interesting to see. Like I said, for silver, I still think we're looking good for moves to the upside, and same for gold. I talked about this during our member webinar, but one thing I just want to reiterate briefly here before we wrap things up is that gold is obviously very contingent on supply and demand. And for the first time in a very long time, or over the last, 10 years, we've seen a significant uptick in the amount of gold held in global reserves across the world. So looking at the amount of gold held in global reserves, it's about 38% of the total accumulated wealth, where the dollar or the dollar is about at 40%. So, we're seeing the dollar trend down and gold trend up. And obviously gold is very contingent on supply and demand. So seeing this price action or seeing this, supply and demand happening behind the scenes tells me that, gold could plausibly continue to grind higher as long as this accumulation continues. This is on a scale of, beyond just retail or large speculators or commercials. This is governments putting gold in their global reserves and speculating that it's going to maintain its value over the long term and using it as a backing method for their currencies and their economies. So seeing this, I think, is encouraging if you're long gold. And I think that in the long term, we could see outperformance from gold relative to the dollar. It's tough to say, in the short term, because I think, like you pointed out, the dollar is looking primed for a move to the upside. But gold has been performing tremendously, and I think it's set to continue to perform well because the demand for it continues to surge.
Appreciate that macro overview, Monty, but I think that should do it for us here today. We're publishing trade ideas. We have a live chat as well as research reports every week. So if you guys want a 2-week free trial to CryptX, check out StickyTrades.com/CryptX for that 2-week free trial. And thank you guys for joining, and we'll talk again soon.
Take care.